Hello traders, this is Dave with the Compass Options Live Trading Room, and I just wanted to do a quick video on just kind of a recap of the first month of the year. We haven't completed yet, but into January, and recapping some of the 2023 trades that we took and trade results. So again, well, thanks for coming to this. Thanks for watching the video, and let's just get on with this thing and get on with this and get started. All right, so again, all signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, couple of charts here. This is the chart of the SPY on my TC2000. This is the close on Friday. We just broke through it. This is an all-time high for the S&P 500, and after moving up for about 2 months, 2.5 months, we were threatening it. A lot of people thought that we were never going to get through it. They thought there were double tops. They thought that this we were going to get a sell-off. All these people that are perma bears and people thinking that you just can't go any higher. Basically, they shorted the market and they got trapped. Basically, their accounts are getting destroyed. So this is the SPY daily. And these are standard candles right here, and that I use on TC2000. You can see this nice smooth move up here since 1st of November. And I also did it on Heikin-Ashi candles, since I've been talking a lot about Heikin-Ashi candles, especially like Heikin-Ashi reversals. Amazingly enough, the Friday candle was a Heikin-Ashi reversal candle. There's a wick and a tail on this candlestick right here, and there's a Heikin-Ashi reversal right there with a flat bottom. We had another one back here, and see we had a nice run with that. So anyway, that's the SPY, all-time high in the SPY. Be interesting to see where we go this week. But we've been bullish. All of our positions have been bullish for a good long time now. So that is what the direction we expect the market to go in. We'll see if it continues. All right. What I want to do is I just kind of want to go over. There's a lot of new people that have joined the room and joined the alert service. So I just kind of want to recap, and I'll do this in each one of the periscopes, recap the rules to trade by. First thing is we trade the best and skip the rest. This is a kind of an easy way of saying we just look for the very highest probability trade setups. Those are the trade setups we take. We don't mess around with trade setups that don't meet enough criteria to give us an edge. So we trade the best, we skip the rest. And another thing that a lot of traders find odd is our objective is not to make trades. Our objective is to make money. So we're not taking trades just to take trades. And this is really important because a lot of traders don't have patience and they'll just take trades because they're bored, or they think that this trade looks okay, I'll take that one. No, we don't do that. We look for the very best. So again, our objective is to make money, not to make trades, and we do that by taking only the very best trades. All right, and again, to be a profitable trader, which I'm sure we all want to be, we need an edge. We need an edge over the other retail traders. And our edges are, we have the Right Line Compass system to let us know when the institutions are in the trades and when they're not. This is really, really important. Second thing is we trade relative strength and relative weakness. So we only trade stocks long that are outperforming the SPY, and we only trade stocks short that are underperforming the SPY. This increases your edge because of the fact that if you go long a stock that's outperforming the SPY and the SPY turns around and heads back down, you're not going to go down as fast. It's going to hold up. You're going to be able to get out, take a little profit, take a little loss, but you're not going to get hurt bad because that stock has been trading outperforming the SPY. And we trade with the market trend. This is another edge. If the market is choppy, then we'll have to trade in the direction of the stocks only. But if we have a market that's trending up, like we did with the market on Friday, then we trade with the market trend. That gives you the wind at your back when you're making a trade. So that's really important because now if you've got institutions in the trade, the stock has got relative strength. It's also going up at the same time the market's going up. This gives you a huge edge over other retail traders. And the last thing is we want to buy at support or near support and sell near resistance. So don't be chasing stocks. Wait for them to pull back to your support level and then confirm to the upside that they've reversed. The Compass system is the system that we use for anybody who's not familiar with it. This is the system that allows us to see when the institutions are trading in a stock or when they're not. So it identifies the highest probability setups while sidestepping setups that look good, but will fail more often they succeed. In other words, stocks that look good on the chart, but they don't have the institutions in there. We skip those. The Compass does this by identifying when institutions are driving the move and when they're not. And the Compass system analyzes very complex trading data and displays the results in easily identifiable visual format. And you'll see some of those here as we go along. Again, the visual element makes it possible for even new traders to find high probability trades without having to be an expert on doing technical analysis. So until you get good at technical analysis, Compass system is going to help you find the very best trades only and skip the other ones. And again, we want to get an edge over other retail traders. Remember, we are not trading against the institutions. We can't beat the institutions. We want to trade with the institutions. So this is the edge that we have over other retail traders. So who and what are institutional traders? Institutional traders are algos and institutions like Goldman Sachs, Morgan Stanley, T. Rowe Price, and Vanguard. Those are funds, the mutual funds. You've also got hedge funds, thousands of hedge funds with billions of dollars put in that, and also retirement funds, big retirement funds. That's where the institutional traders are, and those are the folks when together they can move a trade or they can move a stock, and we can't as retail traders. So what we want to do is only trade trades that are being driven by institutions, trading stocks with relative strength or relative weakness, and I keep hammering on this, it's very important, and trading in the direction of the overall market. That gives us the edge. So again, how does this give us an edge? Well, our stocks are going to be supported by institutional buying or selling. The stocks will be outperforming the SPY. They have relative strength or relative weakness, and stocks that are moving in the direction of the overall market. This whole overall view is how we find the highest probability trades to take. Okay, we'll move along here, and this is basically a kind of a funnel. This is a basic high probability trade setup funnel. First thing we want, when we look at a stock, we want the daily chart and the 5-minute chart to be aligned. So if you're looking at a stock to go long, you want the daily chart and the 5-minute chart to both be bullish, so that you can give that stock some room to breathe. You can keep it overnight or for a few days if you want to, as long as the daily chart stays bullish. So you don't have to worry that much about the 5-minute chart. Your entry on the 5-minute chart, you would like to take a good spot where it's bouncing off a support. But again, the daily and 5-minute chart need to be aligned. In other words, don't be taking a stock long that's got a bearish daily chart. I don't care what the 5-minute chart looks like. Again, trade with the trend, both stock and the market. So if we get the market going up, we want to trade stocks bullishly. And that way we're trading with the stock trend and the market trend. Obviously, the compass indicators need to align. We need to have the compass indicators need to be bullish, which is blue and green, or bearish for down stocks, which would be yellow and red. They just need to align. If they don't align, then we're not going to take the trade, because that tells us that the institutions are not confirming that they're in that trade. And then again, we have relative strength and relative weakness, which we've been talking about, and enter near support or resistance. Right? That's kind of the funnel. You drop your chart, you drop your stock in there. It's got to meet all of these criteria, and then it comes out the bottom, and then you've got a potential trade. So again, the funnel method for highest probability trade setups: identify the market trend for the day, if there is one, and trade in that direction. Again, the stock to be traded should have daily and 5 minutes chart aligned. This is really, really important. Compass indicators must align in the direction of the trade. The stock should have relative strength, relative weakness to the SPY. And we're not talking about RSI here. We're talking about a stock outperforming the SPY. You just watch the 5-minute chart. You can see if the SPY goes sideways or heads down, and you've got a stock that's moving up, that's got relative strength, and vice versa on relative weakness. The stock should be above the VWAP for a long and below the VWAP for short. That's on the 5-minute chart. I don't trade VWAP only on the 5-minute chart, but You don't want to go long a stock that's below the VWAP. You want to wait till it gets above the VWAP to go long and below the VWAP to go short. All other things being equal, of course. And again, enter the trade near the confirmed support or for a long and confirmed resistance for short. And again, there should be no nearby support or resistance on the daily chart to limit your profit target. You don't want to be getting into a trade that's got 10 cents to the 50-day moving average or the 200-day moving average. It's going to limit your potential profits. And have patience. This is really the key thing. Please learn to be able to sit and watch and align these, watch the market, get a feel for the market. Don't be jumping into trades just to make trades. And again, this is the highest probability trade setup, just in a little bit more detail. Again, the modified Laguerre, which is the momentum on the compass system, for the current time frame and for the multi-time frame, they need to match. So that'd be blue or green for bullish, red or yellow for bearish. All right. And again, the rest of these are fairly redundant. I do look for Heikin to reversal candles to confirm an entry. I talked a lot about that on the last recent videos lately, and we also have pop out of the box signals that add conviction to the trade. All right, so that's how we find the highest probability trade setups, which is what we trade. In the room, if you're not familiar, in the room and in the alert service, these are the strategies we take. We do straight calls and puts. We do a lot of those. We also do debit spreads using weekly options expiration. We do time spreads over earnings, what's called a calendar spread, to capture the volatility crush. These are non-directional trades. We don't care which way the stock goes after earnings. We just want it to stay within a certain range. We have a thing called a weekly ATM strategy, the capture premium, which is we sell puts week after week after week on a stock that's moving sideways or moving up a little bit. And then we have a much longer dated put out in time, 6 weeks, 8 weeks, 10 weeks out in time. That's a long put at a lower strike price to protect that particular trade. We create a spread that way. And we also do regular credit spreads to capture premium over a few weeks. And regular credit spreads, the long and short strike have expirations on the same date. And there is some specific criteria we need to make those work. And we also have the SPY super system for very high probability trades to catch the SPY moves or the Q moves. We're looking for the compass system to be all green or all red, green for long, red for short. And we're looking for the SPY to basically be breaking below if we're going short, a support level of breaking above, breaking below a resistance level to go short, and breaking above a support level to go long. And when it gets to those levels and you get a breakout like over the VWAP or over the 15 EMA, that's when you take the trade. That becomes a SPY super system trade. And I don't send alerts out on these. They're too quick. Typically they can be 2, 3, 4, maybe 5 candles, 5-minute candles, but we wouldn't be taking them for all day or overnight. All right, so this is kind of just a quick recap of the September trades that we took. For anybody new, this is basically the kind of percentage gains we typically see, anywhere between 10 and 40 or 50%. We did have 108% of this STX, but we're not looking to produce trades that are 400, 500, 600%. It's just not practical. You're just basically going to be taking ridiculous out of the money type calls or puts, and your win rate's going to be extremely low. So this is how we grind out profits. And in September we did I don't know how many trades, I can't remember, but we with 2,000 invested at each trade, it created a profit of 71.88. That's if you put 2,000 in each trade. That's just a baseline. So I have something to judge it by. Some people use 500, some people use 10,000. It just depends on yourself. But this is if you had 2,000 in each trade, that's what we would have produced. Here's October. Again, this was 24 wins and 4 losses, 86% win rate. And you see we have losses. I want everybody to be aware that we have losses, but you can see we had General Mills here for 32%, Hershey for 20%, Restoration Hardware 43%, 61% on JD, 33% Moderna. So you can see the win rates we get here, and we generally produce decent profits month after month. A lot of it depends on the market. A lot of it depends on how long we can stay in a trade. So if the market's trending up, we can have a pretty nice pretty nice day or a pretty nice week. If it's choppy, we have to take trades off a little quicker, and we can't take as big a size. All right, November trades, very similar again, 21 wins, 4 losses, 84% win rate. Usually our win rate is between 82, 84, 87, usually about 87 to 90% over a period of time. But again, here we had 5,160 in profits for 2,000 invested in each trade. And we had Goldman Sachs here, that was a put credit spread for 20%. We had a Strangle here that we got 30% on. This was a put credit spread for 25%. So you can see the percentages are pretty similar month after month after month. And our profits here was 5,160 after 44.80 here in October, 5,160 in November. December, didn't take a lot of trades in December. You had a lot of holidays, a lot of really sluggish market. The volume was really low between Christmas and New Year's. So we didn't do much trading in December. We had 14 wins and 2 losses, 87.5% win rate, 2,000 invested in each trade, netted 31.15. We had some small wins. Meta was only 5%. There wasn't a lot of movement. A lot of the trading in December, there were gap ups and gap downs in the SPY, and then the market just basically chopped around sideways all day. Those kind of markets are really difficult to take a lot of money out of. But I mean, that's win rate's fine, and that was perfectly happy with that. Here in January so far, we've got 11 wins and 0 losses. This is the trades that we've taken in January. A small number again, 11 wins and 0 losses. We've still got another week to go, a little more than a week to go in the market. We've had some nice wins though. Vertex 37 here, Vertex 32. We had played Vertex a couple of times. We played Meta 3 times. We played it here for 14%, paid it here for 24%, and then we took a debit spread, a credit spread on it as well for 25%. Get a nice debit spread on DPZ just on the 16th. That was, we just kept for 1 day. His work day, 26% on the 12th. And Spotify, this was an intraday trade. We took 20% quickly in that. So that's a recap of the recent month's trading activity in the room. And to just kind of recap 2023 trade results using $2,000 per trade. And again, this is a hypothetical. I know when I trade, some days I might have 2,000 in a trade. Some days I might have 5,000 in a trade. It depends on the market. I basically scale my risk to what the market's doing, so that if it's choppy, I'm not going to bet as much. If it's sloping, I mean, if it's trending, I'm going to bet or I'm going to invest a little bit more in each trade, and I'm also probably going to let it ride a little bit longer. But anyway, investing 2,000 in each trade in the Compass Options room produced a profit of just a bit over 60,000 in 2023. So using an account balance of 50,000, again, these are hypotheticals, but if you had 50,000 and you put 2,000 in each trade, you were using 4% of the account balance when you first started at the beginning of the year. The percentage was lower as the account grew, of course, and it produced a 120% return on the initial $50,000. So your account balance would have gone from 50,000 to 110. And so therefore, at the end of the year, if you were putting 2,000 to each trade, that was less than 2% of the final account balance. And you know, some people when they scaling up like that, if they were taking 4%, they might be putting 4,000 into a trade when they get to the end. That's basically your risk tolerance and how you want to trade that. I talked about Fibonacci candles. I did want to go over the Fibonacci candles, the advantages over standard candlesticks. I did a video on this, a couple of videos recently, or a couple of webinars on this recently. So if you haven't seen it, the Fibonacci candles, the advantages over standard candlesticks, it identifies confirmation of a trend reversal. When you're looking to get into a stock that's pulling back, for example, you want to go long, and it comes down and it stops, like at the VWAP or at the 15 EMA, at some support level that you've got, you don't want to get back in until it's confirmed that it's gone back into the original trend. And you can identify that much more easily using Fibonacci candles than you can with standard candles. And Fibonacci candles also allows trade entries on a confirmed reversal, avoiding failed breakouts. So by using Fibonacci, when the stock comes down and hits support and then bounces, this is going to give you a much much smaller likelihood of that breakout failing. So you can avoid most of those. It smooths out the price movement to eliminate noise. It allows traders to stay in a trend trades longer, avoiding shakeouts. It identifies waning trend momentum when the stock's starting to lose momentum. You can see that, and you can exit for profits at that point. And again, it makes it much easier to visualize the current trend. All right, so that's what Heikin-Achi candles do for us. And this, by the way, is a Tesla chart. I've showed this before. This is a trade we took back probably in July. But I want you to see, this is a Heikin-Achi. These are Heikin-Achi candles here. And if you see this candlestick right here, that's a wick and a tail followed by a flat bottom. Heikin-Achi bullish candles have flat bottoms. They always have flat bottoms. Bearish candles have flat tops. And so when you get a Heikin-Achi reversal, which is a wick and a tail followed by a flat bottom, and then you get another flat bottom, this tells you that you're in an uptrend. And you see how easy it is to identify this trend with these flat bottom candles. And then you get a wicking and a tail. This is where you probably want to take profits in the trade. This is actually where we get into it right here. And you can see, and of course, it was good to be long because you can see the compass system being all green. We knew that the institutions were buying the heck out of Tesla. But that's what a Heikin-Achi reversal looks like. Now, I wanted to go over Gilead. This is a trade we just took on Friday. We're holding it right now. We took it on Friday on a 5-minute chart. This is where we took the trade. And these are standard. This is the standard candles here. And you see this is where we get into the trade right here. And we just decided we were looking for a good entry on it, and I'll show you the daily in just a minute. But this is where we get into the trade right here. You see how it's above the 15, and we're getting a breakout of compression right here. And here's Gilead on the daily, and this is why we took it. This is a daily chart of Gilead with using Heikin-Achi candles. So you see this candle right here. This is Thursday's candle. You notice it's got a little bit of a wick and a tail on it. And then you see what happens on Friday, flat bottom candle. That's a Heikin-Achi reversal candle, which is why this is a nice setup for Gilead to get long. And some other ones we've taken. This is Vertex that we took recently, and I really don't remember when we actually took that. Yeah, we took Vertex, and again, you can see the this dynamic compression zone. That's what this shaded area is. Here's a pop out of the box signal right here. So we could take this any place after this pop out of the box signal, anywhere along here, because this is a daily chart. And this pink line is a VWAP. We do not use that on the daily chart, only on the 5-minute chart. So this is a good entry, and then there's another good entry. Anywhere along here was a good entry as it rides up. All right, so yeah, that was a Vertex that we took. This is Meta that we took. Again, same thing here. Meta, we traded this 2 or 3 times, but you see this break right here. You see how the current time frame momentum goes from red bearish to blue bullish, and you see how it comes out of a dynamic compression zone right there on the daily chart. That's where you would get into the trade right there. And you know, it did sideways, moved up, we're chopping around, but we made good money on this thing with a debit spread. I mean, with a credit spread, put credit spread, and with calls twice. And Dr. Pepper, this was when we took on a day trade. We took this as a call debit spread. We got long with a call debit spread, bought 1 call, and we sold a higher price call for a pretty inexpensive entry, and it moved up. As you can see, it moved up pretty nicely here. And this was our entry right here. See it coming off the VWAP, pink line, pop out of the box symbol. Nice green candle right there. There's our trade in DPZ. And you know, I forget how much we actually took on that. Let me go back a bit and just look at it. I can tell you where we were. DPZ right here. We had debit spread 21% we took on DPZ. So that was a 21% gain on this trade right here. And again, you see right here where we took it. You see how this, you've got this pop out of the box signal. You see how the current time frame momentum went from bearish yellow to bullish green. And you pop out of the box signal. Perfect entry for this after coming out of compression. Again, that pop out of the box signal is telling you that you've got a compression break right there. Workday was another one we took. we took this overnight for quite a few days actually, and see how it's coming out of dynamic compression right here. This is where we took it. As it breaks out of dynamic compression, everything went blue here and green, and we took it here, and then we wrote it up, and we get out. I think we get out on Thursday or Friday. I can't remember. I think it was Thursday or Friday. We had a nice profit in workday as well. And this Dollar Tree, this is an older trade that we took, but I just want you to see on the daily chart how much selling there was here. The institutions were selling the heck out of this thing, and you see how it breaks down below this dynamic compression zone right here. Breaks right below it. That's where you can get it anywhere along here. You take it and then you write it down, and you get a nice flush down right here that gives you a nice profit. QSR, this was one we took a while ago, but I wanted to just show how I use the daily chart and the 5-minute chart together. You see how we had a blue here and green, so this is bullish. This is the daily chart. You see it breaking out here out of this compression area, pops up, breaks out. So when we wanted to trade it, we knew it was bullish on the daily. We were looking for an entry on the 5-minute to get into the trade, and you see we got we've got this thing riding sideways. Then we go to green right here on this candlestick. So once we go to green here and we have a nice pop out of the box symbol off the 15 EMA, which is this little green line, up it goes, and this was a nice QSR trade. We just took it intraday. The daily chart was bullish right there. You can see it, and the 5-minute chart was bullish. We picked our entry and we made a nice profit in QSR. And KHC was another one we took. We had this one we took here. Didn't do anything the next day, and then it gapped up this day here. We took profits in KHC right there again, and you can see how everything is bullish. Just give it a little bit of time. Nice little breakout there. And UNH, a beautiful short. You can see they're going from blue to yellow here on the daily chart. The institutions are selling it. You can see the pop out of the box symbol right here as it breaks below dynamic compression, and there's your pop signal to the downside. And we took it overnight for a nice short on that one. We bought some puts. All right, so that's kind of a recap of what we've done last year and what we've done so far this time in January. Trading high probability trade setups with the criteria we've got is an extremely successful trading style, and it's important to learn that. We've got a lot of people in the room now that are just finding really good trades by following the same procedure. I can't see them all, so we have a Discord room where we have a couple of professional traders in there. They're also looking for high probability trades, and they post charts on them, and I call them out in the room anytime I see something anytime I call out a trade in the room or a stock in the room. I may or may not take it. I'll tell you any trade that I take, but if it's a stock I like and I haven't taken it, if I call it out, it's still a high probability trade setup. We have a lot of people taking those kind of trades. So the trading room goals, by the way, is to help members become consistently profitable traders under all market conditions. We started this room in January of 2022. If you remember rightly, that was exactly the beginning of the bear market, which we traded for 16 months in a bear market, and we made money every single month through that bear market. We don't really care what the market's doing. We just follow what the market is doing, and we make profits based on the highest probability trade setups. We want to teach members the most effective use of the compass system. Dominator system, not so much right now, but the compass system, this Ninja has been a big problem for me. So I'm focusing on the compass system almost exclusively now. And we want to educate members on identifying and trading the highest probability trade setups while being patient. This is important. And we want to accomplish these goals in a relatively low stress and disciplined environment, so that you're not scalping or hyper scalping and trading under tremendous fear or greed. We don't want to be trading off of emotions. So you want to keep your risk manageable, so you're not having too much risk, so that you'll be too nervous. And I recommend you don't even look at your P&L when you're trading stock. When you're trading, wait until it gets to a technical exit and take it off. Worry about the money later. But if you're following your P&L during the day when you're trading, you're gonna end up trading your P&L and not trading the technicals on the stock. And it's really important to trade the technicals on the stock. This was the 2022 performance. We had 86% win rate and 340 total trades and a profit factor of 2.16, which is very good. I haven't looked at the profit factor for 2023 yet, but I'm suspecting, I think it was 2.47, but I have to look and see. But it was very, very good. This is you can look at this. This will be, you got a video in this. You can go back and look at it. This is just how to do put credit spreads, the rules for the highest probability setups. I have a video on all of the setups that we take, all the strategies that we take. But this is particularly for put credit spreads, which is a beautiful method to use in neutral to bullish markets to bring in premium week after week and month after month. This is a post I have that you can go to. This is a one that I did on debit spreads. Again, if you're a member, you see you can have access to all my videos. I have a video on using debit spreads, using time spreads, put credit spreads. Everything that we do for strategies is out there. And this is a post on Hikinashi candles, which we talked a little bit about here. And this is the Compass of video library. These are the link to the videos that I have for all the different strategies we have. Also the Compass system indexes and how to use them, not indexes, the indicators and how to use them. All right. So just for a recap here, this is the stocks I'm watching for Monday. This will be for Monday, 1/23, January 23rd. I'm looking for ESTC, the long docs, VRT, INFA, and GTLB. We're in stocks right now. We're in Gilead in the room. We're in BSX in the room. These are the only bearish stocks that I would even consider right now as core and TME, but that can change in the morning. These are just what I see as of Sunday night. This doesn't, you don't know what's going to happen on Monday morning, but I'd be leaning bullish right now. I mean, that's my bias is a bullish market. And if take any of these, anytime you're taking a stock to enter the next day for longs, you want to wait for those stocks to break over the previous day's high, and they should have a high probability trade setup. They meet the criteria for a high probability trade setup. And for shorts, you want to look for short entries to break below the previous day's low with a high probability trade setup. So in other words, assume that the previous day's high and the previous day lows are going to be the first support and resistance levels that you're going to encounter, and you want to break above this resistance or below the support in order to go long or short. And try to take the trades that are trading with the market trend. If we get a trending day in the market, these are what you want to be looking for, the longs. If we're trending down, you want to take the shorts. If the market's chopping around, then you can look at either one. All right, so that is that's the Periscope video for January 22nd. Again, that kind of covers the beginning of the year. We've had a nice month. We closed out some really nice trades last week, but keep in mind the market's been very bullish. Be careful not to get too overconfident. When the market has a big move like we did last week, frankly, it was pretty easy to make money. And a lot of people really made a lot of money in the room, and I'm gratified by that. But don't get overconfident. We know that trading is not easy. We know that you're going to run into there's going to be some problems from time to time. We're going to have to take some losses. So just try to keep steady, stay patient, focus on your technical analysis, and try to trade with as little emotion as possible. So everybody have a great weekend, and first of the week coming up here, coming up to the last week of January, and I wish everybody the best, and we'll see everybody on Monday morning. Thank you very much.